Well, I think we would agree that a mortgage broker just trying to write asset finance on their own with no prior experience is a big mountain to climb. Well, I think because the types of assets are so broad and diverse, agricultural equipment, invoice discounting, escrow facilities for import, finance and those sorts of things, a mortgage broker's experience is normally going to be in and around having a residential mortgage to do. So although each one's different, they're very much the same, whereas in our business we find that the elements that are required for each of those sort of different classes is slightly different. So the experience they need will be gained over time. There's nothing that they'll be able to step straight into today. I think motor vehicles are what we still refer to as sort of the low-hanging fruit. They're everyday transactions that we're seeing from mortgage brokers, and it's a really good toe in the water. They tend not to be too complex in terms of what's required, and certainly for businesses, we see a lot of turnover of vehicles, so that's probably a good one for them to start asking their customers. You've got a car, do you normally finance it? How long do you normally hold your vehicles for? And then they'll get an idea as to what position they're in at the moment and when they're likely to upgrade, and then certainly put forward and say, look, we also do asset and equipment finance. When it comes around to upgrading your car, give me a call, we'd love to assist. For us, we see a lot of car transactions, so probably 60 to 70% of the business that we write each month is cars in terms of the number of transactions, but then that does get skewed a bit because we see some of that heavier end machinery and trucks and trailers and all those things, which obviously have a much greater value, which then based on the amount of volume that we write, it's certainly not 60 to 70% of what we do, but in terms of the number of transactions, we see an awful lot of cars because that's what people are coming across in that interview conversation with their customers. I think about 50% of a mortgage broker's customer base will probably be self-employed. They're generally industry statistics, and we know that those self-employed businesses buy cars, buy machinery, buy computer equipment, and depending on the size of the business, branch into further areas, pallets and racking, maybe fit outs, perhaps CNC routing machinery, who knows. A mortgage broker is going to collect through his client needs analysis their asset and liability statement, their company's asset and liability statement, their financials. So he's going to be able to glean very quickly from those financials loans to other lenders, interest on loans that they're paying off. So they'll normally have on a balance sheet, loan to a financial institution. So if he starts to inquire about what they are, depending on the sort of loan that he's going for, some sort of commitment schedule from the customer, if they normally ask for those sorts of things, they'll see a commitment schedule that outlines when they took out certain commitments, how long that commitment was for, what the monthly repayment is, if there's a balloon. So that's a really easy one to look at that commitment schedule and understand a timeline as to when perhaps those assets are due for either refinance or replacement, depending on the business.